Hey everybody, this is Patrick. We're going to do a video here on using Edge Scalper Reversals as our only strategy, and I'm going to show you how to build a balanced day trading portfolio. So as you're going through your day and you're entering and exiting positions, I'm going to show you how to spot them, how to trade them, and whether you're doing it with options or you're trading shares, like either a prop firm or your own account. This is going to show you exactly how to do that. I'm going to talk about position sizing. I'm going to talk about where to enter, where to exit, and we're going to focus on one strategy. And at the end of this video, you should be able to sit down tomorrow and put this into use. So here we go. First, if we're doing calls and puts, we want to pick 5 to 10 days expiration, even if we're day trading. If you're doing shares, we just want to use intelligent sizing. The strategy I'm going to show you here does not make use of a stop loss. It makes use of intelligent sizing. And you might be turned off right now and say, well, I only want to trade with a stop loss, and that's fine. You totally can. If you are being very active about it and you get stopped out and then you want to re-enter the position, that's great. There's certainly nothing wrong with using a stop loss if that's something that you're really good at. But what I'm going to show you here is more about the way you would build a portfolio. So you're building it up over time. You're letting everything have a little bit of wiggle room, and we're using a targeting system that is accurate enough that we can trust that most of our targets, almost all of them, we have an expectancy that they're going to play out over the same day. And because we're building a balanced portfolio, if we ever have one position that kind of goes off the rails, it's going to be okay because our other positions are there to take care of it. Let's take a look at our chart here. And this is SPY. We're going to look at 4 different tickers today. We're going to start here. And I'm just going to explain the edge target and the expansion target. So if you're not familiar with the edge scalper system, it effectively works like this. You've got a trigger at the bottom here. You've got an edge target, which is our first target. You've got an expansion target, which is the second target, the top of the E right here. And we have a stop loss. And so in the traditional way to use this system, we would be trading with the trend. So we're going to be taking it and moving it in this direction. So we enter above a close of the trigger. We wait for a little bit of pullback to see if we get a better price, and then we exit up here. Now, these will take losses sometimes. Sometimes, like this one, doesn't come down quite. It misses it by a couple of pennies. So depending on your position, if you had walked away from the chart, you might not have been able to take profit right then because it would have missed it by a couple of pennies. And then later on, it comes back down and does hit it. But even more reliable than the trending trades are the reversal trades. And when I say reliable, I mean in terms of a percentage of them that will be hit by the end of the day. Because for this particular system, that's all we care about. So instead of taking the trending directional trades, we're only going to focus on the reversals. And the way that that works with this system is if price has hit our second target up here, the expansion target, that's the only time we look. We ignore everything else. But if we see price reach this level, what that tells us is that it needs to come back down to the edge target. So the edge target is our initial target for our first trade, right? If we were trading with the trend, but on the expansion system, or with the reversal system, it's the same. The edge target is still our target. It's like our ground zero. Price wants to get back to that before it goes off and does whatever it needs to do. So we can see here that price came up above this level here. And so that's a great time to enter. We could enter here, or if price had moved up higher, we could enter up here. It doesn't really matter. All we need to know is that price is going to come back to right here, and it has an extremely high predictability of being able to do that within the same day. That's all that matters for this system. So it's very easy, and there's very little to even think about. All we have to do is notice that price got above this level here, and know that price is going to come back down to here. What I am usually doing during the day is I'm watching and I see price hit this, and then I'll draw a line here, and I know that from the upper level here to this lower level, we're going to capture that price action. I know it, right? I don't think maybe I'm going to, maybe you're going to get lucky today. There's no luck involved here. And again, when I say high probability, I'm talking about extremely high probability every single day, day in, day out. It doesn't matter what the time frame is. If you go to a very wide time frame, yes, it might take a few days to play out. But on these smaller time frames, 1 minute, 2 minutes, 30 seconds, 15 seconds, same day expectancy is what we expect. So here's 0.16 move. Not a great move, but it's a decent move. And if you're playing a 5-day SPY contract on that, a put, then that's money. And of course, as price moves up, that just gives us a better entry. So people say, don't add to your losers. Well, we're not adding to our losers. We're getting a better position. So if price moves up here and the same logic applies, well, let's say you put on a trade down here and price kept coming up and coming up, coming up. Well, that's okay because now we have a second target to the downside right here. So you could treat this as one trade. You could treat this leg down here as one trade, or you could just take the whole thing all at once. The whole point is you've got to be able to just enter, let it cook. We don't care about drawdown. We've already done the math. We already know that we can survive it. We're not sizing in a way that's going to destroy our account if it goes against us. We don't care about that. We only care to know that it's going to come back to the price most likely. Okay, so there's a trade. There's a trade. So we have both of those that we knocked out here. I think this gets to be pretty easy to spot, where we have this level here, where price came down and touched this level right here, and then we have another target up here. Now I'm glad this example is here because I want to show you how time affects expectancy. Because the way I'm talking here is that they're all going to get hit by the end of the day. And the truth is that time does not care about the end of the day. It's not locking itself off. This signal here, we never came fully down until right here. And so this is now a valid long trade up to 678.94. I know it's kind of hard to see on the chart there, but we dropped to here. And so now we want to take a reversal trade up to here. Here's the only problem with this. This is at 3:30 New York time. So we have 30 minutes until the market closes. So it doesn't mean you can't take this trade. It just means this is a very high risk trade. If you're entering new day trading positions 30 minutes until the market close, it's basically gambling, okay? So don't do that. You want to be out of your positions by then. You don't want to be taking trades at the very end of the day, expecting them to play out in the last 30 minutes because you will get burned over and over and over again. So we're going to look at setups that did hit our mark within the same day or did validate early. So we got one here. So price touches the line up here. It's got to pop back down. This one here did get hit. So I already showed you this one down here didn't come down till the very end of the day. So we would ignore this setup, but this one here is good. And so from right here, we can take a bounce, go long, and go in right there. Now it could have come back down a little bit, and that's okay. That wouldn't bother us, right? Because we don't care. We only care about staking a position. So if you want to stake a position here and grab a small profit, that's a great idea. If you want to wait for it to come down a little bit lower, that's a great idea. If you want to go down to a smaller time frame and get more signals. So let's go down to the 30-second chart. Here we're going to see a whole bunch of action, and I will show you exactly how they played out. So here we go, some pre-market ones that popped up. This is also really good for, if you're short biased and you start seeing we're climbing up and climbing up, it gives you an idea of where an exit might be, because it's telling you, okay, yeah, price is pushing away from you, but it's going to come back down to here. And so it's sort of, it's good for our psychology when that happens, if you're someone who's watching it like that. So here we go. We'll put a line here, and we see the price came up to here. And so now it's going to come back down to here. And let's see how it played out, if it already did. It did not. Look at this. Okay, so this is when we get into the details. We'll line these up. We came up. We touched it right here. So now we have a valid short. And where's our short target? It's going to be right down there. Okay? So let's see how this played out. There we go. So we entered here at 11:28 and we got paid at 150. So we put a few days on that contract and we're good to go, no problem. Same thing here. Price comes down to this line right here. Didn't quite get down to this one here yet, but it did come up to this one. And then we've got an entry that's going to take us back up to here. So through the course of a day on a small time frame like this, if you're grabbing, a 20th of a percent or a 10th of a percent, on each one of these goes, if you trade options, you are already aware that these are great moves. These are fine moves. And if the move is too small, don't take it. If you feel like, it's not worth it, then all you have to do, give you an example of that. Let's see, I'm trying to find one that didn't quite reverse right away. Like this one. Okay, here's a good example. So price comes down. We touch the expansion target here. But if I measure this and I say, okay, you know what, that's 0.05%. By the time I enter and exit my position, it's just not going to be worth it to me. That's not much of a move. Well, it doesn't really matter because price dropped quite a bit here and it's still valid, right? And this is exactly what we expect. I'm not expecting anything different from this day to day. I'm expecting price to come back up and touch the edge target after it has touched the expansion target. Over and over and over again. Comes down, comes back up. So if we enter down here, well, that's a great move. 0.3%. That's incredible. That's a great day trade. And then let's see here. Then this one gets reversed and we take that one. This one, we come down to the bottom here. This one is, we're pushing it. This is 330. So even though this one did pop up, I wouldn't have taken this because it's 330. Okay, so then let's go over to a few other charts. So the way that I would do this on a practical basis. So if you're sitting down, you say, okay, well, how do I get started? I want to do this. Well, you want to load up a few tickers that make sense to you. I like QQQ, SPY, Walt Disney, Netflix. I just picked these. I picked Disney and Netflix because they're both cheap. $81 and $100. So the contracts are reasonably priced as well. It allows you to scale in and out. And if you're trading shares, it allows you to do the same thing. And if you're trading like QQQ, you can trade TQQQ instead, which is not going to have the best liquidity. So there might be a little bit of spread in the options prices, but it is going to be a lot cheaper because TQQQ is trading for about $50 right now. So you can buy contracts 2 weeks out without breaking the bank on these. And they're going to give you the same more or less the same move. Okay, so let's go to the Qs, right? And so here's when I talk about building a balanced portfolio. You don't have to watch this like a hawk. All you got to do is open a chart, okay? And so if we opened our chart and, let's say we're in the middle of the day and we don't have any positions on and it's, 11 o'clock and we slept in, right? We can just, let's see, I'll pop my line here at 11 o'clock. 11 o'clock, good enough. And we open up our chart and this is all we see. We've got this right here. And I'm looking at it and I'm just going to start measuring my lines here and just start drawing these things out. So I'll put a line here and I go, did we come back up? Yep, we did. What about this one over here? Came back up? Yep. What about this up here? Yep. Okay, we're still waiting on that. Okay, well, this is the 1 minute chart. Well, maybe I should go down to the 30 second. Let's see what's going on there. So we go down to the 30 second. And I go, okay, all right, let's see. Look at this. We got one. We hit this right here. You see this little green guy right here? This one right here? We hit the top of it, but we haven't come back down yet. Perfect. So it's 11 o'clock. We're up here, right? Great. I'm going to go short. We're going to go short. We're going to enter a position, and we're going to grab 0.38, almost 0.4%. Great trade. We're going to let it cook. And the day plays out, and then right there we get paid. It's that frickin' easy. Okay? So now this is a short, right? We went short here. We went short from, let's see here, when we woke up at 11 because we slept in, to right there. We found this trade in 10 seconds. Didn't take us any effort. All we had to do was say, did we hit the expansion? Yes. Have we retraced? No. Let's go short. There's our target. Done. Put it on. And if you watch my other video on how to use Thinkorswim to place mark orders to close at a mark order, then you can actually tell it that as soon as price hits 597.75, convert this to a limit order and sell my contract. Whatever it's worth at that time, sell the contract. I use those all the time. And then as the day plays out, we've got a few more here. It comes up, comes down, comes up, comes down, comes up, and then we're getting to the end of the day. Okay, so you might say, okay, well, that's 1, 2 trade, 3 trades, maybe I want to be more. Well, that's okay. This is a short here, and let's say we do the same thing over here, and you're looking for a long, and these are going to be shorts as well, because SPY and Qs are going to run pretty close to the same. So then we take a look over at Netflix, and we say, okay, what's going on over at Netflix? Netflix is looking pretty good, and we go, okay, this is all right, but I want to go down further. Now these all played out. We can see we hit this one here, came up, came back down, not a problem. That's easy. We're going to go down to something really small in the 15-second, because what I want to show you is that not only does this work on big time frames, but it also works on small time frames. And remember what I said, you don't have to enter right at the exact moment that it hits the expansion target. You can wait. The target stays valid. So if you're on a really small time frame like the 15-second here with Netflix, look at this. Let's just check out some opportunity. Okay, let's make some money. Let's draw a line right here. Okay, boom. So we're watching this guy right here. So price comes all the way down and it bounces right here. And then, of course, we're trying to get up to the edge target, which is right here, which is right there. So we're going to capture this whole move. And that was an easy one. But here's another one that's a little more interesting. And this is actually something that I traded, where I opened up my chart. I hadn't looked at Netflix all morning. I didn't study all the levels. I didn't ruminate on it. I wasn't up all night trying to figure out what the previous high a day was and all that stuff. I only cared about the reversal targets. So very, very easy. Doesn't get simpler. So here we go. We'll say it's 11 o'clock. And I woke up. And I actually didn't wake up at 11, but just for the sake of the story, it does work. I'll show you exactly how I traded this. So I noticed this one right here. So you see this guy right here? We'll just zoom in. This one did something very interesting. It comes down, and we've touched our target right there. Excuse me, we touched the expansion target. And so that means that we need to go from here back up to the edge target, which is there, right? So I didn't notice this until later in the day because I wasn't looking at Netflix all morning. In fact, I didn't notice it until down here. And so I looked at it and I said, okay, hold on a second. We've got this big one right here. And actually, I didn't enter right here. I entered down here. 8107. Yeah, I think I entered down here. It doesn't matter where I entered. The point, it's the same. I entered to here and captured this move. So from 8107, about where I entered, to 8190, was able to capture this whole move. And all I had to do was wait. I just had to wait. Let it play out. Just let it play out. So that's Netflix. So you can imagine here, now we're building our portfolio, right? And our balanced portfolio, we have got a short position on here, right? At 11 o'clock or thereabouts, we've entered a short position on the Qs, right? Because we're going to go short. And then over here on Netflix, we entered a long position. So now we've got a long position going on. And so the reason that I want to have both positions on is because this is supposed to be balanced. And the idea is that in the event of an incredible market crash or a huge pump based on some news, then that may be an unexpected news, then I want to be protected on all sides. And then let's go over to Disney and let's just see what Disney did today. I did not trade this one today, so I'm looking at this blind just kind of for the first time, pulling up the chart to see what it looks like. I don't see anything on the 2-minute chart we could have taken. Let's go down to the 1 minute. And, oh, very interesting. So 1 minute chart. So we come down here. We hit our expansion target here. So that gives us a reversal target up here of 106.11. And then price meandered sideways for the rest of the day and did not come back to the target. So there are two things I want to tell you about this. The reason I wanted to look at this blind was because I didn't know if there was going to be a case like this where we got a target and then we never got a return to it. So here's how I would position this. Two things. 1 minute Walt Disney is not a great looking chart today. And when I say not great looking, what I mean is look at all these little gaps. You see all these little gaps in the price, right? This means that liquidity is low. We don't want to take signals when there are this many gaps in the chart. It doesn't mean that they won't play out. Usually they still will, but it does mean that you're going to either have to wait a little bit longer or your targets are going to be less precise. So some days, like yesterday, looked a lot better. There's still a few gaps, but quite a few less, right? So this is on the edge of acceptable for taking signals. That was yesterday's chart. If we look at today's chart, oh, and then even in the afternoon, you can see how it sort of started thinning out there. And I'm not seeing any reversals at all yesterday. So we never hit this one up top. And we didn't come down to this one until after market close. So we did get a good pop. I mean, it did pop up and take this out. And we did reverse on these. So those worked, I guess. But once we got into the actual day here, there was nothing on the 2-minute chart worth any movement, right? If the 2-minute chart had good setups, then this is okay. Not too many gaps. We could trade this. The 1-minute chart, a little too gappy today. So let's find a different one. Just say, well, we weren't going to trade Disney because the chart had no volume today. Too many gaps. So let's look at the Amazon 1-minute chart. Did we get anything here? This one, we got one. So we came down here and we've hit the bottom here and we hit this one here. So we'll just lump those together and then we'll stick a line here. And that tells us what do we know? We touch the expansion target. We got to come back up to the edge target and we do it right here. So we grab a trade on Amazon. And that's pretty much how easy it is. So we've got a long trade on Amazon here. We've got a short trade on the Q, the short on the SPY that we were looking at. A couple of shorts on Apple. We've got a long on Netflix. We've got another long here on Netflix. We've got a short on Netflix later. I mean, you can just stack these things up over and over and over again. None of this is random. None of this is happening in real time with buying and selling, support, demand, any of that. It's levels that have already been programmed to be hit. One causes the other, and this is showing you all those levels. So in terms of building a balanced portfolio, as you go through your day, you would simply manage your positions in and out. So you enter, we see this and we go, oh, we got a long here. Okay, I'm going to go long. I'm going to set my price target. I'm going to go to the next chart, right? That's all I'm doing. I didn't take any time at all. Go to Apple and go, oh, we've got one here that we popped up here. Yeah, let's go short here. So go short, set our target, walk away, go to the next chart. Go to Qs, do the same thing over here. It doesn't take any time at all to do this. In my observations on a liquid ticker, on smaller time frames, 2 minutes or less, same day expectancy runs at around 95%, maybe a little higher. Occasionally, you will have one that becomes a swing trade and goes into the next day. Very rarely, you'll have them that extend past that. And on rare occasions, you'll have one that takes 4 or 5 days to play out. And on those occasions where it does take 4 or 5 trading sessions to actually come back to a level, it is usually the result of some news event that we already knew about, or earnings, or some other market event that was already on the calendar that caused a displacement. So be aware of earnings, be aware of market news events that might displace us away from a target. And that's really all you have to do. I check Market Watch, every morning just to see, just Google Market Watch economics calendar and you'll get this page here. I look at this every morning. I just say, okay, what's on the calendar today? What events do I need to be aware of? Usually there's not much, right? And then, earnings. I'm not going to trade options on earnings because that's not what these kinds of trades are for. That's a different strategy that you would employ elsewhere. I don't know of an easier way to trade. I really don't. This is as simple as it gets. And it's fairly stress-free because you're not managing, tick for tick on moving your stop loss and all of that. Okay, so what if you wanted to trade shares? Now, the big thing about trading options is that options are risk defined, right? So you can only lose what you spend on each contract. So if you put $200 into an Amazon call, well, the most you can lose is $200 on that Amazon call. With shares, you want to define a max daily loss. So I'm going to show you a method of trading this with shares. It does not use a stop loss. It will let every position cook. You got plenty of wiggle room, but it does require acceptance that on very rare occasions, you're going to end the day at a loss. Okay, so most days would be green, some days will be red, and over time, overall, you're going to be good. So here's how that works. So we're going to do a hypothetical account, and I'm going to use Trade the Pool as an example. So Trade the Pool is a prop firm. I'm not an affiliate, at least not as of the time of this video, but I'm just pointing this out that this is a prop firm that allows you to trade shares. So we look at their plans here. We'll look at this one here. This is the $50,000 one. And we're going to pick beginner because the beginner is going to give us more drawdown for our daily pause. And this is what we're really thinking about, is the daily pause. Okay, now this won't fail your account if you hit it, but it will pause you for the day. And we don't want that to happen. Okay, so daily pause on $50,000 is 2%, which is $1,000. Okay, so they're going to give us $50,000 in buying power. And if we hit $1,000 in the red, we're done for the day, right? Max loss is 4% of the account. We're not even going to worry about max loss. We're not going to go anywhere near that. We're not even thinking about that. We're only concerned with the daily pause, which is $1,000. So we'll just use some examples here. We're going to say QQQ. A typical outlier day on QQQ would be 4% would be an outlier day. Now, it will move 4% in a day. It has done that. Recently, we've seen more of that, but that's typically a rare day. If we do a search, percentage of days that QQQ moves more than 4%. Here's what it says. Since its inception, QQQ has moved more than 4%, either up or down, on approximately 1.1% of all trading days. That's about 3 times a year. Okay, and they're also clustered together, right, during periods of economic stress. So if we have one, okay, lighten up a little bit, because that means that we might have another one really soon. Okay, in general, we know that the Qs are going to move less than 4% on almost every day. So the next thing we're going to do is we're going to say, okay, well, how big of a position could we hold and survive a 4% move against us? So what we're going to do is use a $25,000 max position size, because 4% of 25,000 is $1,000. So as long as we keep our position size under $25,000, we can sustain a 4% move against us before we hit our daily loss limit. Apple is about half the price of QQQ. So instead of trading 40 shares, you could trade 80, and that would be your 25,000. But basically what you want to do is say, 25,000 divided by 276 would be 90 shares. So I could trade 90 shares of Apple is about $25,000, right? And we know that 4% is $1,000. So we can go and we can say percentage of days that Apple moves more than 4%. 5 to 7% of all trading days. So this is more volatile than QQQ, because that means that 5 to 7% of all days, we're going to have a move that's greater than 4%. So what that tells me is, don't go all in on one stock. So we're going to give ourselves a budget of $25,000. We're not going to use the whole $50,000. We're going to use $25,000, and that's our budget. Okay, so we're already helping ourselves stay alive by using a smaller budget. And we know that if it hits 4% against us in one position, we're done for the day. We don't want that to happen. So we're going to split this into 4 different positions, and we're going to go a $6,000 per position max. Okay, so it's a little bit less. This is about 24,000 times 4. It's close enough. So that's basically how it goes. SPY is going to be really close to Qs. So in order to survive, we want no single position to hit negative 250 in open P&L. That's it. No single position should hit negative 250 in open P&L. And if you follow this formula, you'll do that, because we're taking our total budget of $25,000, which is going to give us 4% of wiggle room. We're figuring out how many shares can we buy with $6,000, and that's our position size. And we're just going to do that over and over and over again, and we're going to let these stack. And so if you want to spend all $25,000 on one position and say QQQ, you're going to buy 40 shares instead of 10, that's fine. It just means that you need to let that trade play out before you add more because you've already spent your budget. And now, at the end of the day, $1,000 daily loss, daily pause is not that big of a deal, right? If you're trading the system, popping in, popping out, and you're capturing, capturing decent moves on this exact system here, I would say you should have an expectancy of somewhere between $250 and $300 a day. Once you start combining the directional trades with this, so not just taking the reversals, but also taking the directional trades with the stop loss, that's going to increase because that's a profitable system by itself. So you can combine them together. You certainly can. You just have to keep this in mind that if you're trading without a stop, reversals only, it's the easiest way to trade. It's the least stressful way to trade. You just have to keep your position size in mind. If you're interested to learn more, you can go to our site, algotargets.com. Just Google algo targets, and you'll find this website here. It looks just like this. Clear entries, clear exits, clear edge. This is the system that I trade. I built these indicators for myself, and I started letting other people use them, and now they are available to everyone. And it is two indicators. One is mostly for swing trading, and then the Edge Scalper one is the one we just talked about. There's a lot of scams out there. There's a lot of stuff that does not work. This is something I built for myself, and it absolutely does, and I just demonstrated exactly how to use it every single day. So it's $42 a month, billed annually, or you can do month to month, and regardless of which plan you go with, there's a 30-day money-back guarantee. That is how confident I am that this will change your life. Contact me if you have any questions, or you can go through our email, and then you can also go down here to user guides, and you can check out the PDF guides on this to learn more before you even buy it. There's also some longer walkthrough videos here as well. All right, thank you. We'll see you in the next one.